Okay, a very good evening, everyone. Welcome to this evening Corporate Connect webinar. This webinar is organized by SIAS and supported by SGX Group. My name is Sunny. I'm from SIAS and I'll be your host for today. Today, we welcome Oceanus Group Limited, as well as our audience from the YouTube Live platform. Oceanus Group Limited, listed on SGX Mainboard since 2008, is a global food tech leader with a diverse portfolio spanning food production, distribution, services, and innovation. Committed to building sustainability today for a secure tomorrow, Oceanus is transforming its business through digitization, driving supply chain innovation to enhance food security worldwide. We will kick off today's webinar with a market highlight session, followed by a corporate presentation by Oceanus Group. Thereafter, we will dive into the Q&A segment. But before we dive deeper into Oceanus Group, let's take a quick look at the latest market trends and updates. So I'd like to invite market analyst from Mumu, Kaijin, to share with us the latest market highlights as well as trends that Mumu is looking at.
Thank you, Sunny. Hi, everyone. Good evening. I'm Kaijin from Mumu. So I'll be sharing some update on the recent market developments. So without further, I hope everyone can see the slide. Let's begin. So I'll be covering in terms of from a global perspective. So on the US itself, we have seen the S&P climbing towards back is to all-time high. So about for the week itself, SPX as well as the Nasdaq had actually both rally about 4.4 and 5.4% respectively. Then as of which, approximately 97% of the S&P 500 has actually finished reporting its earnings, and out of which 82% actually beat the earnings expectation. So these earnings has also displayed strengths with regards to the entire US market itself. So the earning strength has actually continued to support the index even at the rich valuation levels. That said, I think as of now, investors are still remaining cautious moving forward. On the other hand, on gold, prices has actually rebound relatively as anticipation for rate cut increases. So what we can notice in the recent market developments is that the Fed has came out with their statement presenting themselves relatively dovish due to weaker economic data as well as the previous US shutdown. So this has actually led to the likelihood of a rate cut happening in the upcoming December. So additional recent geopolitical tension has also prompted investors to actually revisit gold as a safe haven assets. As of year to date, gold has actually been one of the stronger performance since the year 1979. So looking at the heat map itself, market has remained relatively resilient, but still cautious, looking ahead in terms of the upcoming private payroll data, PC inflation, as well as over consumer sentiment for further directions. So despite healthy earnings, as mentioned earlier, right, for the quarter itself, valuation does still remains relatively elevated as a key concern, and as well as pushing investor, prompting them to profit take. The next thing we want to dive deeper is actually the rate cut. So looking deeper into them, probability has actually increased to 87% from 63% just a month ago. So this is due to persisting inflation, relatively sticky, as well as high unemployment numbers coming in. That said, moving ahead, in the upcoming inflation data print, the US government or the US Fed actually indicated, the US government actually indicated that the data for October will not be reported and they'll proceed with November instead. So this would actually, to a certain extent, create some form of uncertainty as well as lack of transparency towards the relevant data, which the Fed is worried about. So in short, prompting further dovish sentiments from the Federal Reserve. The next thing we want to highlight is in terms of the geopolitical landscape, there is actually the ongoing tension I think everyone is well aware of between China and Japan. This happened after Japan Prime Minister Takashi actually on November 7 came out with a statement stating that if let's say there are forces against a self-rule island claimed by China could actually warrant certain military response from Tokyo. This has actually led China to boycott Japan, affecting travelers as well as their consumer sectors. So in the recent weeks, Japan has also deployed missiles near Taiwan, which actually angered them indirectly or directly. So where China says that Taiwan is this Taiwan issue is actually internal and Japan should actually stay out of it. So China in retaliation also prompt the US to step in restraining Japan from further escalation of the ongoing tension. The next other conflict that we want to look at is actually Ukraine and Russia. So Trump has actually highlighted that there's a good chance a deal that has been made despite the recent corruption incident. But that said, these ongoing conflicts actually, or this ongoing war has actually lasted for about 3 years, even though Trump himself said that upon getting into the House, he can stop the conflict within a day or so. So this has actually created a lot of frustration for Trump himself. Further negotiation is still underway. And then we saw some knee-jerk reaction on the oil prices, given if let's say, assuming the tension were to ease up, oil price will actually fall subsequently. The next thing we want to look at is Chinese market. The Chinese market has actually inched slightly higher. However, concerns still remain regarding their domestic growth and a property downturn as well. The Hang Seng Index and the CSI 300 actually inched slightly higher, about 2% and 0.1% respectively. Tech performing only slightly muted, erasing gains since the August. So that said, comparatively, the Chinese market as well, the US market, the Chinese market has actually outperformed the US market year to date to a certain extent. At the same time, posing relatively attractive valuation for, I would say, the investors currently. So China ahead has also plans to introduce new measures to actually prop up the struggling property market via mortgage subsidies as well as income tax rebates. So going back at home, the Straits Times Index actually inched higher. So as of recent week, so they are up about 0.75% for the week. That said, the Q3 for the third quarter, the GDP grew stronger, leading to a higher revised number for the fiscal year 2025. Growth, that said, for growth in 2026, we are expecting slight tapering due to the ongoing tariffs. So back at some of the economic data, things that we really want to focus on is actually the inflation number. They came in higher at about 1.2%, higher than the forecast of 1.1, largely driven by food prices, which actually rose the most in the past 6 months, coming in at 1.2%, which I believe Dwayne from Oceanus will be able to address them today. Next thing in terms of the corporate developments, we have MES stepping in, or like say MES, the Equity Market Review Group, announcing a dual listing partnership along with NASDAQ. So this partnership entails listed companies in Singapore that has about $2 billion in terms of market cap to be listed in NASDAQ, increasing capital inflow and liquidity to Singapore market as well. So as part of the EQDP as well, a second batch of the approximately 2.85 billion has been allocated to 6 asset managers. So the names are listed below. Then last but not least is SGX do have plans to actually reduce the overall board size, the lot securities for shares that is $10 and above from 100 to 10 units per lot. So for the Straits Times Index, the underlying performance is relatively mixed. I think we can see this in line, or at least in trend, a similar cautious fashion observed in the global market. So to sum it all up, wrapping up this sharing, we are expecting fresh data to be coming in next week, at least within the US post the government shutdown. And for individuals that's actually looking forward to the rate cut happening in terms of the decision to be made, it will be on the 10th of December, happening next week. But as of what can we expect towards the end of the year? I think everyone is asking, will there be a center rally? I think that is a question everyone wish for an answer. I myself, unfortunately, I do not have a crystal ball. But one thing I can say based on past statistic or historical empirical evidence is that since the 1950s, S&P has actually risen on average about 2.5% between Thanksgiving and the New Year's Day, with a win rate of about 68%. So I would say they are relatively generous. This actually helps in terms of supporting the year-end market performance. So to a certain extent, what we can based on historical performance, is that we should be able to expect market to perform relatively well, at least. Also because of the next other sentimental data we'll look at is which the January barometer. So it's actually a stock market theory that actually showcase to us in terms of how a market will perform depending on how the market perform in the beginning of the year in January in that sense. So if let's say market so if let's say January were to perform relatively positive, it should indicate a relative positive performance towards year end. So in that sense, with this amount of information, we can kind of like position ourselves accordingly. To that, I think I shall pass my time over to Sunny and Dwayne. Yeah. Cheers.
All right. Thank you, Kaijin, for that insightful sharing and a very quick roundup on what is happening in the market. I think a lot of you would have a better clarity of what the overall market is performing. I would now like to invite Dwayne, who is the CFO of Oceanus Group. So, Dwayne, would you be diving into the corporate presentation first before going to a Q&A session with us?
Yeah, sure, no problem. In fact, let me just put up my screen. Is it visible?
Yes.
Okay, all right. Well, thanks, Sunny. First and foremost, just a very brief introduction. My name is Dwayne. I'm with Oceanus Group. And in fact, it's very interesting for me to sort of have the opportunity to come aboard this SIAS session. In fact, when I joined Oceanus Group about 7 to 8 years ago, I remember one of the first few things I actually had to do was to actually present myself before a SIAS event as well to share about the business. And time has flown, in the span of 8 years, and as you'll see later in the presentation slides, Oceanus itself, especially for those who are unfamiliar, has got quite a long and colorful history, right? And in my slides later, I plan to sort of share. And the reason why we plan to usually share the history of Oceanus also is because, well, apart from it being an interesting story, it helps people to understand why we're doing what we're doing today. So the first part, so my presentation will be split into 3 key components. One is about the history, right, which then builds upon the purpose of Oceanus Group. Next is really the build-up phase, right, that happened sometime between 2017 to the last couple of years. And then the last part of the presentation really looks towards the future, right, our plans, our ambitions, and our vision. So if I go right to the very beginning, Oceanus started out in 2008, became a public company. And, back then, I'm sure most of you would know. In fact, today, when I go out and, during networking events and introduce myself and I give my name card, the first thing people see or say rather when they see my name card is, hey, Bao Yi or Bao He, right? And true enough, yes, that's indeed the case because in those years, Oceanus only had one job to do, which is abalone farming, right? In fact, it planned to do one of the largest or the world's largest land-based aquaculture farms. So in this slide here that you see, this is pretty much an image of the aerial photos of the farms that's basically based in China, about an hour and a half drive away from Xiamen. And, Oceanus back then raised about close to 200 to 300 million Singapore dollars, a successful public raise through the capital markets, took all of that cash, right, and threw it into China here. What you have here are basically tanks, right? And it's land-based aquaculture because if you notice, this is on the land along the coast, stretched across the coastline. And there was close to about 200 million cage abalone. So in terms of scale, it was very attractive. There was a lot of noise and attraction. And therefore, Oceanus began its job of doing abalone farming. Unfortunately, right, barely a few years since, going public and raising these funds and putting all these funds into the farms, a few unfortunate events, right? Because as with farming, you depend on the weather patterns. And in the case of Oceanus, there was a massive weather change and a typhoon that came in 2012 that wiped out all of the bio assets, caused massive infrastructure damages, workers couldn't access, the auditors themselves couldn't go down and assess the situation, which then also therefore led to the disclaimer of the financial accounts back then. So revenue stopped, right? The operations stopping, revenue also stopped. There was a full write-down of assets. And very soon after, with hardly any business, you would have creditors starting to come knocking on the doors, right? And you're talking about both your operational, your institutional lenders coming in. And fair enough, because Oceanus at a point in time did not have revenue. There was a whole pile of loans that was already becoming to be defaulted upon. And this was when the market cap of the company started to tank quite significantly. An interesting story, before Oceanus, I, in fact, was representing the creditors of Oceanus Group. Not a story for today, but who would have thought that today I now stand in a position of basically working with the company. So with all of this doom and gloom, and all the bad financial results, naturally, Oceanus was put on the SGX watch list in 2015. And, as most of you know, because now the concept of watch list is really coming off because SGX is trying to be more friendly. But back then, what it means effectively is Oceanus had pretty much the next 2 to 3 years to turn itself around, failing of which, would probably be the end of Oceanus as far as because it would require to receive a cash exit offer to shareholders, and I don't think at a point in time there were any white knights that were willing to come in, right? Had it taken that decision. So then started the cleanup. A silver lining appeared, amongst all of that bad news, and that came in the form of Peter Koh, which was really the start of the turnaround management of the business. Long story short, Peter Koh never really needed his job. And the reason I say that is because he previously was already retired at the age of 45. Before that, he ran a rather successful business in global merchandising, had offices across the world. One day decided to sell the business, cash out, and enjoy life. So people would ask then, if that's the case, why would he volunteer to take on this job? In a nutshell, the reason he took on this job was mainly because to try to pay it forward, to try and find a way to see whether or not, because shareholders at that point in time had pretty much lost everything. A very interesting fact about Oceanus at a point, there was about 9,000 public shareholders on the register. About 60%, or maybe even 65% of these shareholders were actually 60 years and above, right? And you therefore have this demographic of people who put their life savings in Oceanus Group. Apparently, at that point in time, people could use CPF money to invest in penny stocks, right? And that was what happened. And fast forward to that day, if your story was, if you were to turn up the AGM around between the 2012 to 2015 period, it's quite a sad sight because you have shareholders who are crying for the money back, the people who are trying to attack the directors, and that's because these people had lost a lot of money, and therefore, you had Peter who came aboard, who started out as a small investor, and he had basically the vision of trying to pay it forward, to try and rebuild the business and at least return value to people who lost it the most. So the first thing that, with him coming aboard and the appointment and rebuilding of new management, the first task really was to sort of restructure, to deal with creditors. I did mention very briefly earlier that, there were about close to $50 million, or in fact, $100 million worth of defaulted loans. And some of them were operational creditors. In fact, management, Peter himself, had to fly to the farm to basically take back control of the farms. And what I mean by take back control is because at a point in time, all the farms that you saw earlier were taken over by the local gangsters and mafias because the local creditors had hired these group of people to take over the farms, right, to enforce over their loans. And on top of that, to add salt to injury, it's also, the financial accounts were disclaimed since 2011, right? And I don't think, as far as I know, I've never come across a company that has seen so many years of a disclaimer of opinion and is still around today. But, since 2019, there's been a lot of effort to maintain and make sure that we maintain clean accounts, when facing the public. So at the 2017 AGM, when Peter and management stood on stage to basically announce the end of the cleanup and turnaround phase, I think that really added meaning. And I guess that was really the fulfilling of that vision of turning the business around, or rather the start of that true significant turnaround of the business. And results started to improve. With these results, we took and applied to SGX to get ourselves out of the watch list. And safe to say, in 2021, when we got off the watch list, we were in fact one of the only companies in Singapore that were able to truly crawl ourselves out of the watch list status with our own two hands. So I've spoken at length, about the history. So some people may ask, okay, all right, so that was the history. What has Oceanus been doing? So gone are the days where, as I said earlier, where Oceanus did only one job, right? Only in one country. We had to move beyond that and start to have a diversified sort of lens when growing the business. So in the past, in the 5 to 6 years that followed since, the Oceanus had then restructured and diversified across 4 key pillars, namely your food production, which were the farms you saw earlier, distribution, services, and innovation, right? In terms of the food production, some of you may be aware that towards the end of last year, we started to enter into contracts to basically divest our farms. And the reason for that was because we found that the business started to move towards core assets. And the core asset business really reflects the distribution, services, and innovation side of things. So on the distribution today, our product portfolio, in fact, I would say that distribution represents 90+% of the revenue right now. We are basically a cross-border B2B merchant. If you want to visualize, our containers are basically moving between, Australia, Middle East, Southeast Asia, servicing also a big part of China. The products that we currently carry out right now are basically your frozen meats, your seafood, beverages, and commodity style products, so like your sugar products, your grains, and whatnot. So we are working hard and we are continuing, apart from diversifying, also going deep into each one of those product segments to make sure that we basically grow strongly our both customer and supply relationship. On the services side, we have Oceanus Trade Log, which represents our logistics and warehousing arm. And this is really a natural extension of us moving into this larger scale cross-border B2B trading. And as for innovation, that's a topic that I'll speak a bit more at length towards the end of my presentation, because that really represents the big next step for Oceanus Group. So there you have it, right? The story of how, Oceanus started out as a humble, rather, and at a point failed abalone business and sort of worked itself to turn around and restructure. We continue. So all this slide here shows, just a snapshot of a number of our subsidiaries. Which focuses, so they're basically siloed down to their respective product segments, each one held by CEO with strong KPIs, basically to take Oceanus to the next level in the next few years. So in terms of global presence, previously, when the new management came aboard, Oceanus only had 2 dots, which is Singapore and China. So we are working quite hard to make sure, right, as a cross-border B2B, our global presence is felt. We make sure that we have the proper partnerships as well. In terms of, so this slide here is a visual representation of the story that I shared earlier, right? 2015, back then, the start of restructuring, there was about $900,000 worth of revenue. There was a need to ramp up, right? And the build-up phase started around 2018. And in those span of 4 years, we ramped it up to 300+ million. Peter, the group CEO, has put down strong targets. And as you can see over here on the right side of the slides, we do have plans to hit that $1 billion target over the next few years. So today, recently there has been a spotlight that's shown on Oceanus, not just on a local perspective, but also a global one. In fact, ever since we started to exit the watch list and deal with this sort of cross-border B2B element, we also started to establish relationships with governments. And I'll speak to that later, why that is the case. But, I think in a nutshell, we started, as we were growing, we were trying to find new opportunities. We saw value in being a Singapore company, right? Especially dealing in food, where there are geopolitical tensions. The world is in a need of a neutral middleman, right? And Oceanus sees itself as being strongly placed in that realm. So now to the third part of my presentation, Oceanus 3.0, as the slide says here. What's next, right? What's our ambition? What's our vision? So before I talk about that, I think it's important to talk about the current landscape surrounding food, or should I say food security. In fact, in our last AGM, we stood before shareholders And we announced our sort of rebrand vision, right? Our tagline for Oceanus Group. As you can see here, it says to be Asian leader in food security powered by tech. It's a bit of a mouthful, but if I just break it up a bit here, I'll first talk about food security. So I did say landscape. Kajin said, did mention about, the inflation, the rising costs. And it's a very interesting thing because food as a topic, we realize has become more and more of a sensitive topic. Never before, and ever since the days of COVID, never before have we seen food being really moved around with that level of sensitivity, and you sort of throw in the factor of climate change. Right now, we have about 10 billion mouths to feed by 2050. And, according to data that we see, the world is not producing enough to reach that target. So it's almost safe to say that by 2050, there will not be enough food, right? And then, as I mentioned earlier, now countries, and we've seen examples of that during COVID, where you have countries starting to not just only snatch over toilet papers, but also containers of food. And, apart from this point in the landscape that we see, we also start to see the working capital crunch that's faced between your growers, manufacturers, merchants like yourself, right? And working capital is becoming very tight. World Bank has released a recent study to show that, right now there's about 150 billion. In fact, we came across another paper that said it's actually double that, right? But regardless of that, I think it's important to say that, in this landscape, that's when we started to see where Oceanus could sit, or what we call the Oceanus advantage in this entire environment. The reason for that is because, number one, like I said, we proudly fly the Singapore flag, right? We are a Singapore business, but we are global, right? We now have the credibility of the turnaround history, right? We've sort of restructured, we've made ourselves more lean, more ready and hungry, because we've already sort of brought ourselves from the basement to the ground level. Now we're looking out to the world to grow. And last but not least, over the years, we've worked hard to basically strengthen ourselves in terms of our presence in our supply chains and also our trade relationships. So I've talked about food security, now the tech up, right? So sometimes people do ask us, hey, look, you say using tech and what do you mean? So this slide here really sort of encapsulates that vision that we had since a couple of years ago. And there's quite a bit on this slide, but if I may just sort of divert your attention, for example, to that blue belt, right, which starts from production all the way to marketing. So over the past 6 to 7 years, Oceanus has spent, blood, sweat, and tears turning around a business, restructuring, getting on a watch list. And since then, plotting itself across the entire supply chain. Right. And behind the scenes, we are starting to tech up, by way of starting to use the notion of blockchain for traceability of food to make sure they have strong data analytics, and also revamping our ERP, right? But really the key phase here within this slide is the one that's in gray, which is called harnessing cross-pillar synergy, right? And the idea behind it is that standalone, all of those subsidiaries that you saw in Oceanus, be whether a subsidiary that does in seafood or meat, standalone, frankly speaking, they're no different from the fishmonger in the market, right? Just that you do it in a bigger scale. So the question is, how do you give yourself an edge? How do you sort of tie it together so that we have this one tool and platform? And the idea to that really, as we start to look forward, is the next phase of Oceanus Group, that 3.0, and this via our new technological solution called Oceanus Digital Intelligence Network, or ODIN for short. So what this means is, behind the scenes, we are organically, Oceanus Group will still continue to organically grow its trade volumes, right? Whether or not we buy and sell certain produce, or with sugar, or the meats, or the seafood, that is something that we will continue to work hard to make sure that our relationships get stronger, our volumes grow bigger. On top of that, our margins also get higher, right? But in the next step, right, because to prevent ourselves from becoming the dinosaurs of tomorrow, we realized that actually there is a segue between food security and finance. And through this platform, Odin, which frankly speaking actually started more as an internal project, we start to see that actually it does answer to a lot of issues and problems in the market right now. And Odin, as you can see here, provides avenue for different stakeholders in the supply chain to either control the goods, to have a good view of information, or also have the funds, right? The proper sense, or should I say the control of funds. And, Odin right now comprises of a few components. There's the Odin Finance, Odin WS, Odin Pay, Odin Food Security Tokens. Just quickly on the food security tokens, that is in fact the next phase, right? Because what's the point of doing all this when eventually, there isn't that way to sort of further monetize, or should I say, to further augment, this Odin or digitalization track. But this slide here effectively shows that, whilst it's an Ocean's platform, the idea is it needs to permeate across all the different stakeholders. So in fact, today, Odin right now has recently gone live. We have already brought on board third-party warehouse managers. We have third-party finance coming on board that's being aggregated on this platform. There are borrowers, and in fact, Oceanus also represents a portion of these borrowers on this platform as well. So, I mean, I did speak at length. It does sound technical, but, a lot of times people say it would be helpful if you can help us visualize it. So, in fact, here, this slide, I'm not sure if the video is playing well enough, but this, in fact, here is Odin WMS, in fact. This here, as you can see here, this is a Jurong Logistics Hub. This is, in fact, the live feed, right, of the goods that go in and out of a particular warehouse that we are working with, right? And it's in Chinese because this is for a Chinese client. And this again speaks to the data control and visibility. Going further about data control and visibility, in fact, Odin went live earlier this year. We have already hit about within 6 months, we hit about 200 million in gross merchandise value. This year, again, utilizes all of the various technology I shared, allows you to have live tracking of the containers. You are able to throw in all of your loads. Using AI, it basically just crawls through all the information, loads in all of that data. From this platform, you have merchants that are able to draw down upon loans, right? Once they connect with financiers, for example, they can draw down these funds, use these funds to buy goods. The goods will go into a warehouse. Everything is auditable, right, via this live log. And last but not least, the logistics players, for example, come on board. They can actually provide the service of making sure that they govern the goods on behalf of the financiers. So there's quite a bit happening here, but at the end of the day, this really is the next step for Oceanus Group. And we do have quite strong plans for it in the next phase. So yeah, there you go. I do appreciate that I did spend a bit of time talking about Oceanus, but I thought it's quite important to go at length only because, even today when I go out, people sometimes still think of Oceanus as still doing the farming, but this here hopefully will add some color as to what Oceanus is doing and plan to do in the near future.
Okay,
all right, Sunny, over to you.
Yes, thanks, Dwayne, for that very insightful and a detailed sharing on Oceanus Group and the transformation journey since 2008. So I think that would give a lot of our audience a lot of very informative information for them to decide whether they will be looking forward to Oceanus Group developments going forward. I think there are very exciting times to come. So I'd like to thank Dwayne again for coming on today's show. We will be going into the Q&A segment now. So do feel free to submit your questions in the Zoom chat. And I will, for our audience on YouTube, you can also join our Zoom session via the link to post your questions in Zoom as well. We endeavor to answer as many questions as possible today. So let's proceed to the Q&A session first, starting with some of the pre-submitted questions. I think the first question was coming in very sharp and pointed for Dwayne, I think. The Oceanus share price has dropped to almost historical low level. Do you know of any reasons or any explanations from the management side of things?
Yeah, it's a very interesting question. In fact, if I just, add a bit more to that, when Oceanus came out from the watch list, obviously at that point in time, share price had already tanked a lot, right? And I would say that for the first few phases of Oceanus Group, admittedly, management wasn't paying too much attention to share price. Why? It's because the company was in survival mode, right? In fact, everyone within the company were digging their heels in to make sure that the company had tomorrow, to make sure that there was even a top line to start off with, right? And with the exit, right, where that leads us now is, okay, there is a business. Now Oceanus is facing the world. It has about $300 million worth of top line, right? And then share price started to move down. To answer your first question, I would say that I wish I knew the exact answer. I mean, the very easy way to say is, oh, it's market forces. But I think the more honest answer to that is that I think shareholders were happy to see the restructuring, the turnaround. But if anything, all shareholders are even more hungry right now for profitability, right? For dividends, so to speak, to see that, there is recurring profits and there's this sense of, oh, Oceanus is becoming an MNC. And then only then will share price start going up, right? So I think right now, as much as as I said previously, dug our heels in, didn't pay so much attention, just make sure that the company could grow, could restructure, exit the watch list. Now it's different. All right, I would say that right now we do keep an eye to our market cap. And we're starting to do so more and more of it, right? Not so much to the sense where it consumes us, right? Because at the end of the day, as us as management, we focus on the fundamentals. We want to make sure that Oceanus has good fundamentals financially, it's fundamentally strong also in terms of the vision and plans ahead. But what we're doing is we're spending a bit of time to make sure that, look, if we do something, we want to make sure that, number one, the market can see the value. Number two, the market is excited by it, right? And number three, they are convinced that it will continue beyond just tomorrow. All right. So I would say that right now it's still a slow process, but safe to say right now the focus of management is not just purely look at the business. I think right now we have that sort of different lens whenever we take on new opportunities. Best believe it is right now very much within our goal to ensure that shareholder value will start to increase, and really it's just making sure that we first grow the business fundamentally.
Yeah, I do agree with some of the points that you pointed out. I think investors are very sharp nowadays. I think we have seen Oceanus Group deliver on the top line now. So going forward, if let's say Oceanus Group continue to grow and deliver on the bottom line as well, I believe there will be improvement in the share value and stock price as well going forward. So the next question is, what is the plans for the company future going forward? So I noted that you mentioned 90% of the revenue now derives from the distribution business. So what is the growth of this distribution that Oceanus is looking at?
So for distribution growth, I think very importantly, because it took us very long and it was quite an uphill task to basically get out of the danger zone, right? And to make sure that there's a new lease of life. We've seen that we've grown quite aggressively. But right now, when it comes to our distribution segment, I think going ahead is to make sure that we do so at a sustainable level, right? And what I mean by sustainable is that going forward, with every dollar of revenue that comes on board, we want to make sure that the margin that tags behind it is also of a higher level. I would say that, in fact, I would say 90+% of revenue distribution, apart from the margins, is also the product distribution. I did share earlier, basically high level, right, frozen meats. But actually within each one of those, there's also that opportunity to go in and also have a good look as to what other products or in fact markets we can go into to make sure that, at the moment we bring it in, it immediately is accretive, or should I say profit accretive.
Okay, so that gives us some insights into where the company is growing going forward. The next pre-submitted question is, can shareholder expect some kind of dividend payout in the near future?
Yeah, I mean, it's a very good question. I mean, very relevant. In fact, this is a question that our shareholders ask us almost at least since I joined the company years ago, have been asked repeatedly every year. The response to that is, it is my absolute goal right now to bring Oceanus together with management to a level where we can pay dividends. But I think we cannot forget the fact that Oceanus had that history, right? And if you just flip the page over to the balance sheet, there's still about $200 million worth of accumulated losses, right? That's a hole that was dug early on for our time, and we need to make sure that we fill it up as quickly as possible. Because the moment we fill it up, then without a doubt, safe to say, we are already in that space of talking about, okay, how much do we want to return to shareholders, right? Because they deserve it, because they stuck on with the company. But yes, unfortunately, it's not a tomorrow or next year thing. It will take a time because that is not a small amount. It's a burden that we have chosen to take on for each one of us that chose to come onto this business. But nonetheless, I would not say that it's an unrealistic target. I think it just requires a bit of time. Eventually, with fruition of all of our plans, yes. I'll hope one day, when we repeat this SIAS event, Sunny ask me that question, I'll say, you know what, we'll pay it tomorrow.
Well, we are all looking to that. In fact, I think my father has invested in Oceanus shares quite a long time ago, even before I entered the industry. So I think this turnaround is really a good thing that we are looking forward to, and looking at the revenue growth. I think we have a very good potential chance in the next few years that there's a chance that we could see some dividends coming out. So the next question is, what does the company aim to do to reward shareholders for their support over the years?
Look, again, I hand in hand with dividends. I do wish to say that in Oceanus Group, frankly speaking, it has been a very eye-opening experience for me, because from my background, the whole company versus shareholder relationship has always been a very arbitrary one. But like yourself, Sunny, your father who invested earlier on, a lot of times when we go to AGM, we do meet a lot of these shareholders, and some of them really do tug at your heartstrings, because they walk up to you and they say, look, I've invested in this company, since the very beginning, right? And some of them are already retired. Some of them, already start to walk up to the stage with their walking sticks, right? And it then begs the question, are we able to do something to make sure that these people who have stuck on with the company see the light at the end of the tunnel, or receive dividends, right? I think at the end of the day, it really comes down to dividends. But I think as much as it's a repeated sort of type of question, I just want to reiterate that the mindset of paying back to shareholders who put their vote on the company, all right, vote by way of buying the shares, is really worth something, right? And I think that really speaks to us in terms of the board and the management. Going ahead, I do believe, we do hope, rather, that shareholders can see that there are basically efforts that bring us step by step closer to the target.
Okay, thanks for that answer. I think, in my opinion, I think the best reward that shareholders can get from the management of any company would be the company is run well, run sustainability, and make sustainable profits over the years. And that would be the best reward that shareholders can be looking forward to. So I believe that is looking at the turnaround story of Oceanus. I think that is happening right now. So the last pre-submitted question was, any plan to transform the business? And if I may expand that question a little bit, I do look through your presentation slides earlier on the Odin kind of a FoodTech technology business. There's a part on financing this distribution network. So how much does the financing contributes to the revenue of Oceanus now, or going forward, how much will financing contribute to the business?
No, that's a very good question, Sunny. Firstly, Odin on its own, in terms of revenue contribution, because by way of a platform, right, it will earn a fee based on the volume, based on a particular percentage. Not convenient for me to share exactly 100%, but as with most platforms, there's always a cut, right? So just by way of volumes, be it whether the financing comes to us, comes from us, comes from a third party, private debt investor or family office, that's that revenue stream, right? We started to go live recently on the financing. But in terms of, one thing I want to add on that point is really to explain how does exactly financing work on Odin. It's very interesting because in Oceanus Group, we have over the years as a trading company taken on bank facilities, right? And as with most of you who work in companies or do some sort of trading, you will know that trade facilities is very much the core of a trading business, because most trading firms are required to take on leverage. In fact, some of you who has looked through Oceanus financial statements might feel that Oceanus seems to be high leverage. But in our view, that is actually very much necessary to grow and also to function well as a trading business. The key thing is making sure that the cash conversion cycle is fast enough. But anyway, on Odin, what we have basically is a platform that allows third-party logistics suppliers to provide a service to financiers. So for example, I'm a financier, I want to come on board and I like what I see. I would like to now play the game of financing by the container. Why I want to do that is because every time you give me an invoice, I'll finance a container straight away. The moment I finance, out pops a notification. I can track the container. I can track the flow of funds. Separately, I also have the assurance because this container is now governed by a third-party logistics provider, right? Who also joins on the platform to make sure they update the goods as and when a shipment comes into the warehouse. There's a green light each time the goods leave the warehouse. There's a red light, so on and so forth. So I know I digress because I thought it important to share that. But to answer the question, in terms of financing, if anything at all, is really Odin as a platform, as a SaaS platform, will benefit by way from revenue coming from the volume. A second way that we can benefit from that is, for example, our subsidiaries. So in a slide earlier, you saw all of our different subsidiaries. They themselves can actually come on board this platform and actually take on what they may seem as, for example, attractive financing, for example, and connect themselves with financiers on this platform, right? It doesn't have the promotions, it could be from third party. So the way to think about it is Odin really effectively is a trade aggregator.
Yeah, looks like Odin is like a full ecosystem of the trade finance system in the food logistic market right now. We do have quite a bit of questions coming in from a live Q&A. So I think we will kick the gear up a little bit to go a little bit faster on the live Q&A questions. The first one coming in from Wei asking that given that farming operations previously have caused massive losses, what percentage of the current revenue now comes from farming versus the other segments of the business?
Yeah, good question. As of today, right now, 0% of revenue comes from farming. Why that is the case is because farming, as you can see since the beginning, had never really worked out well in the first place. Not to mention also, we are a Singapore based company, management are all based in Singapore. To have a big part of your assets and operations located physically, and more so especially when it comes to physical farming overseas, it's very hard for you to grow quickly with a sort of business model. So over the years, what we've done is we started to divest. So if you look at our financial statements, you realize that actually our farms are now classified as assets held for sale. As of last year, it was probably maybe about just a couple percentage point, but as of right now, it's close to zero. So now a chunk of it, which is why I said, distribution, the moving of food around the world, that's the chunk of our revenue today.
Agree there, because farming depends on natural elements, can affect revenue and company performance fluctuate greatly depending on the output of farms. So with that, the next question is for internal controls and governance improvements, what have been implemented to prevent recurrence of past failures?
Yeah. So I think that the part of the question about prevent past failures, that is a very strong term that we strongly believe in as well, because like I said earlier, we don't want to repeat our mistakes. But very quickly, what we've done is we have actually started to ramp up on our internal audit function. So Oceanus Group, apart from having external auditors that's required statutorily as a public company, the board of Oceanus Group has actually brought on board a third-party internal auditor. And this internal auditor focuses on key risks within a group. So recently, the internal auditor was brought on board to basically do a sort of like a health assessment to identify the top 10 risks. And with this top 10 risks, basically what they do is they come in on an annual basis to basically audit or rather assess the risk levels and basically the operating risk pertaining to each one of those points, all the way from sales, accounts receivable, down to cybersecurity. So yes, hopefully that answers your question, Sunny.
Yes, I think that gives the investors more clarity on governance and control of the company. So just to give assurance to investors, does the management think that the issues in the past are now fully in the rearview mirror? And is there any non-performing legacy business that could still pose a risk to Oceanus right now?
I would say that very simply put, because Oceanus didn't start out doing multiple businesses. As mentioned, the core business of Oceanus was the farming. As of today, that has already started to be put aside for divestment. Right now, most of the business, or I would dare say all the business Oceanus is doing, is basically new, right? And in fact, value accretive and profit accretive as well, or contributive to towards Oceanus Group. Obviously, over the years as we grow, whenever the new initiatives that start up doesn't do too well, we make sure that we remain as agile as possible to basically stop that business, right? So I think one of the things is, as much as, there's a bit of an inside joke, in fact, amongst management, whereby we view Oceanus as a listed startup. What that means is, sure, we are listed, we are a public company, but we want to behave like a startup, right? Anything that works, we continue to grow. Anything that doesn't work, we quickly put to one side and move on to the next. And I think that is actually itself a strategy that actually helped us to move off the watch list, which is something that wasn't easy to do in the first place.
Okay. Next, the next question is revenue and net income has not been consistent year over year. Would management be able to provide some rough breakdown of this decline of the business segment?
So the key thing, revenue was always the first target, right? Because we've already identified Oceanus as the next phase forward, being that bridge when it comes to food, right? Trading between the East and the West. So there was a need to grow revenue as quickly. That was the first phase. But during that growth, right, across let's say 2018, right, to 2021, where we grow close pretty much from 4 million to 300 million, revenue was steady on the increase. And that was pretty much the goal. Because again, as a distribution company, if you do not have the size, it's as good as having nothing else. Because having that volume, having that distribution history and relationship with a particular downstream upstream gives you bargaining power, right? And in fact, it's almost like an investment, right, in the ability for Oceanus having a place in the global food trade space. As a result, it's safe to say that in those years, the profit probably came a bit secondary, right? Because without revenue, you don't have the profit. But that being said, right, standing here today, it is quite important. In fact, in the last AGM, Peter stood on stage and did say that in the next phase going forward, the focus shifts towards cash flow, working capital cycle, and profitability. So I do hope that, in the next few years, we actually will start to see that shift, right, in that focus, no longer just that, that exponential curve in revenue, but really that steady increase in profit.
Okay. The next question is what percentage of the group total revenue or gross profit attributed to fees and commissions generated by Odin platform? I believe we are talking about 90% there, which we talked about earlier. The next part of this question is, what is the 3-year revenue target for this segment?
I suppose for Odin, right?
Yes.
So right now, because Odin actually just went live probably less than 12 months ago, right? That in itself is quite new. So I would say that the revenue contribution for that is quite immaterial or very little. But the potential is quite large going forward, because we do believe quite strongly in this platform play. In terms of the 3-year hit plan, I would say that the next 3 years, the contribution to revenue over the next 3 years would still be slower, right? Why is because one thing you have to realize is that we are creating, Odin as a platform that has never really seen the likes of anything similar, right, in the market so far. We've tried very hard to do a competitor analysis. There isn't out there, right? So what we're trying to do is to make sure, because the last thing we want is to drive it and make sure, and have revenue go and sort of forget again, where we come from. We want to make sure that we do everything with a risk-adjusted approach. Every accretive revenue is done so to make sure that it can continue to go from 1 to 2 the next year. So long story short, I guess over the 3 years, the Odin contribution revenue, slow and steady. But if anything, hopefully it becomes a bit more exponential towards the 3-year mark onwards.
I see. So the 300 over million revenue that we're looking at 2023 is mainly from the distribution business.
Oh, yes.
And
yes. So,
the projected revenue outlook is going to go up to 1 billion Sing dollars going ahead.
Yes, correct.
So that is some clarification then between Odin and the distribution business.
Yeah.
Okay. Next, this question is saying, I'd like to thank Dwayne for that sharing. Odin sounds very exciting, but are there any evidence of meaningful capital growth or share price appreciation that shareholders can look forward to?
Well, I think the strongest evidence of share price increasing is actual share price increase, right? So I think unfortunately the only way to prove that is time, right? Because standing here today, and as with some of the members who've joined us tonight have correctly pointed out, right? Share price is low, and that is correct. Share price is relatively low. In fact, if you ask us, or in fact, if you ask Peter, CEO, he feels that based on what Oceanus has planned in terms of what we're trying to do on a global world stage, we feel we are undervalued, right? But that's big talk. As of right now, be whether he says, she says, it's really just making sure that over time, and I do hope that the next 2 to 3 years we will start to actually see that value come in and reflected in share price.
Okay, next question we have from Richard. To him, it seems that Oceanus business is quite complicated nowadays compared to the past. So how does Oceanus make money? And if I may expand that question, how about your service and innovation pillars? Would Oceanus be looking at expanding those business to contribute more to the revenue of the company?
Yeah, no, I mean, I do appreciate because I did try to share quite a fair bit on the slides, but to put it very simply, today, very basically speaking, if you look at our financial statements, almost every dollar that you see is due to the buying and selling of food, right? It's just the trading. Fundamentally speaking, the big part of that audience we shared, that's the start, right? That's the start, that's the future. But today, fundamentally, we are a trading business. So as much as, we share about the future, today we stand and look at Oceanus, if you sort of draw the cross-section, it's really the buying and trading of, the foods that I mentioned, your beverages, your meats, your seafood, your sugar, the food commodities. That is effectively the reflection of what we're doing right now today.
Okay, and as an extension of that question, with this diversified business segment, right? I think distribution is definitely the clear growth that we are looking at for Oceanus. So wouldn't these other services, innovation and food production, which is farming that you said that contribute less than 0% now to the business, would it be better to not go into or having such business inside Oceanus and focus solely on distribution only?
Yeah. So to that end, you can think of it as Oceanus today, again, 90+%. We are, in fact, most of the manpower that we have here are basically here to sort of service the distribution business, right? But it's very dangerous to be satisfied to say, oh, look, let's focus just on distribution. Because if you think about it, especially in the next few years, when we move into the new era of high tech, right? And when I say high tech, with the rise of AI, right? Trading itself is going to be a different animal altogether. And trading of all aspects, I mean, not just trading of food, even trading of equity, right? I do know of people who right now run agent modules that helps them trade in the equity market on their behalf. So this is actually the future that we're facing. So as much as we look at today, big part of our revenue distribution, a lot of the talk that we're talking about in terms of Odin, in terms of the services that we provide, the SIAS platform, right, and the financing, the traceability, that is necessary to ensure that Oceanus has that future as still fundamentally a distributor, but with an edge, right? So the key thing here is what we've been talking about today about Oceanus is really finding that edge. Not just a distributor, because anyone eventually can distribute, anyone can set up a private limited company and distribute. The point here is finding that edge. And that is a big part of our efforts right now today as well.
All right. Okay. So Dwayne, just now you talked about risk in the industry. So there's this question, are there any structural or thematic industry tailwinds that may affect Oceanus? How do you look at this risk ahead in the industry?
Good question. Actually, for us, risk, there's quite a lot. And the number one risk that we see is the risk of competition. What I mean by competition is actually not now per se, but it's also the fact that right now a lot of business models are changing very rapidly. And also because if you think about it in terms of sample size, right, the population of companies that provide the service of buying and selling products. That's plenty, dime a dozen. And Oceanus is just a very small segment of that. The question is, the moment someone finds the way to do it better, right? Then, that's when we start to sort of lose either that market share or that edge, right? So I keep talking about edge, and that's very important because distribution itself is quite a boring topic. And it's, sorry to say that it is a boring topic. And as a result, there are now a lot of people that are trying to sort of supercharge it, to sort of see whether or not there's ways to innovate it as well. That's the number one risk in terms of the second risk, I would say, really is the geopolitical risk. Because again, cross-border, I mean, we've just come off the recent, headlines of tariffs, by Trump slapping on left, right, center. Sure, it did not materialize, but that was actually a rude awakening for us to realize that actually, at the whim and fancy of a particular individual, a particular trade route could entirely be abolished, right? So that's something. So I think to address that, what we've been doing is making sure that in terms of our routes, our suppliers, we try to be diversified as possible, but nonetheless, still a massive risk that we need to watch out for over there.
Yes, indeed. I think that food supply chain risk is very real with the trade tariff threat that happened earlier. And of course, recently, you also see geopolitical tensions between Japan and China. I mean, you don't really need to introduce sanctions to divert this supply chain movement. You just need to give a warning to your citizens or your people to say that, hey, don't buy from certain country, and then the whole food supply will get rerouted another way. So I think that is a very key concern. I think Oceanus is on top of that.
And on that point, Sunny, if I may add, we had an internal conversation, and it's quite a funny one because we realized actually one thing we're very scared of is one day Lawrence Wong stands on stage and say, you know what, today we will follow China, or today we decide to be with the US, right? And straight away, because Singapore being the epicenter of these East and the West, all of a sudden has to wipe off the other half of the world. And best believe if that happens, I tell you, that's a risk that we cannot fathom.
All right, but I don't think honestly that will happen. I think Singapore will always stand with its own interest in mind and thereby not taking any side. So I think Oceanus being in Singapore will leverage on that position so that we will always manage the East and the West together, both hands. So we have come to close to the end, but maybe just let me ask one last question. We talk about the risk we address between the East and the West. So this question from one of the shareholder is stating that does Oceanus has an established roadmap for expanding the market or the geographical presence that it has now, given that one of your slides shows that you are in US and you are in most part of Asia as well. So are there concrete plan or roadmaps that you can share on how do we expand in this market?
Yeah. So one of our targets expansion really is, in fact, Southeast Asia. If you look at that map that I shared earlier, in fact, you realize that actually we don't really have that strong presence, in fact, just across the border, which is Malaysia, right? Because in terms of geographical distance, that's one area that we want to focus on. Because at the end of the day, Singapore is meant to be the epicenter of Southeast Asia, right? That's the area to go. The next thing, again, if you look at the map, you realize it's a bit empty in the middle, right? Your Middle East, your Africa. There are, in fact, more time being spent actually starting to meet up with potential parties that they are from that region. Why? Is because number one, is a huge opportunity. But we do it at a very measured pace because it is without a doubt that these represent huge opportunity, but also huge risk. So we want to make sure that the partners because the local partners that meet with are reliable, have the same mindset as us, are basically, whilst entrepreneur, but also respect, the rules of business generally. So yeah, I would say that, geographically speaking, Southeast Asia and that, Middle East, and African region, that's going to be one of our targets over the next 3 to 5 years.
I see. So that also explains why right after your global presence slide, that was the network of government relations that you guys are building up and expanding into those markets in the Middle East and in Europe as well, the middle part of your map. So I think we'd like to thank you for answering so much of our questions today. We are actually 5 minutes past 8 p.m. already. So we'd like to thank Dwayne again for staying back with us on this Corporate Connect session. So we also like to thank everyone for joining us today. We hope that we have taken enough time to address all your questions and deliver insights into Oceanus business. We have come to the end of today's webinar, and we hope that you find this session very useful. In case you do miss any part of today's session, you can actually rewatch this webinar on the SIAS YouTube channel. So do also visit our SIAS website to get updates on the latest upcoming investor education program and initiative. And we'd like to thank Dwayne again for joining us. And the next Corporate Connect session will be on next Thursday, 9th of December, featuring Trendline Group. So do remember to sign up and register, and I hope to see you there. So thank you, everyone. Have a good evening, have a good rest, and to you, Dwayne, as well. We hope to see you again in your next business update on Oceanus Group. Thank you, everyone. Thank you.